Hi everyone, my name is Rishad. Today is the 17th of March 2024 and I'm going to be going over my weekly prediction for SPY. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then I'll switch over to the Excel sheet where we'll go over last week's prediction and do some basic option chain analysis, and finally, obviously, review the supports and resistances for this week as well, or the stops. But before getting into the video, it's important to make the disclaimer that all information here is completely educational, and therefore it is absolutely essential that you conduct your own technical, fundamental, whatever analysis before entering a position in the market to ensure that you're comfortable with the risk, reward, trading strategy, trading styles that I implement in this video, since some might be too aggressive and some might be too passive for your taste, so definitely keep that in consideration as well. But with that out of the way, let's get into this video. So, monthly charts we can see have been very, very, very positive for SPY recently. Since starting from November 23 until February 2024, we've seen a long bull run, and SPX and obviously SPY as a result have made new all-time highs. And of course, March hasn't closed yet, so we're unaware as to where the market is going. But from the monthly charts, we have a very, very good bullish indication that the market is definitely going to continue. However, RSI is slanting upwards along with its average. The volume, however, is fading off. Although we can't do this current month, we can see that the last month, if you compare it to the start of the bull run here, it's absolutely going down. So we do have a volume divergence, which is a very, very bad signal. It's actually a bearish signal. That's why I'm extra apprehensive in all my predictions in these recent weeks, since this is typically the end of a bull run. It's when market participants are aware on the news and volume starts declining, so it's definitely a signal that the bull market is weakening. But that's what we get from the monthly charts. Now let's switch over to the weekly charts to see this price action in more detail. Now last week we had a high wave candle, and this week we have a doji candle. More specifically, something almost identical to not identical per se, but very, very resembling of a gravestone doji. Although the body is not exactly at the bottom, it is nearly at the bottom, and the wick is almost negligible, and the upper shadow is definitely a lot higher than the lower one. So we can say that this is a candle that is either a gravestone or very, very close to. So it is a signal that the market should actually be going downwards. But just to be extra safe, we will be keeping the same resistance and support as last week, since the price action happens to fall somewhere around the middle but closer to the bottom, which is why this is a perfect buy and sell stop for SPY, since it allows us to capitalize either way the market is going. And more importantly, with the data that's coming out this week for the Fed interest rate decision, if that is also bearish, then that will further add to the performance this week. But I will keep that in consideration, since there is a possibility that the market can rally upwards as well and definitely ruin the prediction. So we do need to be safe. However, for the sake of testing, I will still pretend as if this prediction will go ahead as normal. But we can immediately get that from the weekly charts, where we can get the resistance or the buy stop at 517.38 and the resistance or the support or sell stop at 508.12. So finally, let's move to the daily charts to now see this price action in more detail. Starting the 11th of March, as we saw in the weekly charts, have been very, very erratic, and there's no real pattern. We did have a spinning top to start and a doji candle to end the week. So we do have an interestingly highly increasing volume throughout the week, which is showing that we are definitely in a climax state this week and continuing from last week. So whichever direction the market breaks, it should be with a relatively large amount of force and vigor. And we can say the RSI average at this point has pretty much flattened. However, we do have a cross here of the RSI from above going downwards. So we have a signal again that the RSI should be going downwards. And naturally, that's another bearish signal. So for that reason, we need to be a little bit safe this week. But with that out of the way, let's now move into the option chain. And last week, we didn't have a trade, so there's nothing to review. But this week, we buy when it crosses the resistance at 518.22. Let me check if that is right, since the resistance is meant to be this candle's resistance. 518.22, and the sell stop here is 504.91, so that is accurate. Target of 1% trailing stop loss, and how that works is if the first take profit is hit, then the whole thing is moved upwards, and sometimes depending on market conditions and to some extent personal judgment, either I take the profit then and there, which is usually the case for this stock, this ETF actually, because SPY generally does give around 1% moves, so that is definitely what I pretty much get whenever a profit is made. So with that, a weekly expiry for the max OI is 520 for CE and 502 for PE. PCR is 2.08, highly bullish, overly bullish actually, which is a contrarian signal. A monthly expiry max OI is 530 and for CE and 475 for PE. So actually, you get a bullish signal from the option chain, which contradicts the technical analysis as well, which is why we're being extra safe, since the market is pretty uneven as to which direction it's going to go. But the monthly PCR is 4.35, overly bullish, which is another reason which makes me doubt the integrity of this bull move. But still, monthly and weekly trends are up. But that concludes my video this week. Thank you for watching. Enjoy, and I will see you next time.